What are some of the names in this shorter term period that you find to be on the more interesting side? And we've always been I mentioned at the start, definitely not an Apple fan, and we've had some thoughts on it. I'd imagine that's definitely still not an area you're in, but in this shorter term period where we're kind of AI is just
You
the
might
name
be
of the
surprised.
game. Oh, this might be clip it, clip
Well,
it.
here's the thing, Evan. I mean, you have a thesis, and then if you're wrong, you just adjust. So with Apple, my view was, who on earth would buy an iPhone 17 when you know that the 18 is coming with AI features, which the current one doesn't have, and you can get a foldable phone, which Samsung has had out since I think 2019. I forget. It's been several years, a long time ago. I think at least 5 years ago they introduced the first one. And so, but at the end of the day, all the data that's come out has shown that iPhone sales are actually pretty strong. Now, if you're willing to ignore the valuation, which pretty much you could say that for the entire stock market, then you go, wow, for the first time, arguably since COVID, they're going to put up numbers that are actually pretty good. And they've only grown revenues cumulatively 5% over the last 3 years combined before this one. And, to put that in perspective, the S&P's grown revenues 26% for the last 3 years combined before this one. And so, at the end of the day, if Apple's numbers are good and you're at that time of year that you end up with performance chasing, and it's been a tough year, unless you came into the year negative, like I did, obviously. I had cash as one of my top picks. And then you got bullish in April, which, kicking and screaming, I went there because the market looked oversold. And my view was it could all be fixed with a tweet, which I said in an interview in early April. You've had a tough time because I think most people came into the year bullish, got more negative in March, April, and then got ripped in this rally that ended up happening. And so now, if you're a professional investor and you're underperforming, you're trying to find names like Apple, whatever it is, a big cap, liquid name where fundamentals sound good, where you can just buy it and hopefully play catch up. So we'll see what happens. I actually was more bullish on Apple next year. I thought it would be actually one of my potentially top picks next year because of the upgrade cycle that I thought would happen, because guys like me have been waiting for a foldable phone forever, and AI features forever. But you know what? People seem to be buying them right now. So I think Apple's actually pretty darn interesting. I mean, if I go through them all, I can just do that quickly if you'd like. I think Microsoft, you saw the massive numbers Oracle had. Microsoft has the right of first refusal with OpenAI. So Oracle only gets the workloads Microsoft doesn't want. So I think they should do pretty well. I think with Google, I think you're going to see great numbers out of them. And I saw the OpenAI presentation today about the browser, but those are all features that Google can add to their search experience as well. And so I think, that one's still very interesting, in that it looks like Gemini is doing very well. VO3 is awesome. And the big picture with Google is the ultimate winner in AI is going to be the guy who has the best data to train on, the most data. OpenAI doesn't have any data. Google's got 9 products with over 1 billion users each, and specifically YouTube. And when you put things on these platforms or use them, you're basically signing away all your rights as a user because you get it for free. And so Google's got this massive treasure trove of video that they can train on, which OpenAI doesn't. I think Google's going to be ultimately end up in the winner's circle for consumer AI, especially with the 2 founders back and really working at the company trying to get it going. I think Meta, a similar situation where they started showing ads to their 3 billion WhatsApp users for the first time in the month of June. I think they're going to do great. I know people are worried about, oh my God, Sora 2 is going to cause issues, but I think you're going to see Meta is going to do just fine. And, with Amazon, I am concerned because it doesn't seem like Prime Day went all that well. But I think AWS is going to do great because Anthropic is ramping really, really fast. And so, that's going to be a very tricky one. I think investors will care more about AWS doing well versus them missing the top line, which I think will happen because of e-commerce. But, we'll have to wait and see. And then, with Tesla, as you know, I'm a massive fan of Elon Musk, but the EV tax credits ended at the end of September, and I think Q4 is going to be pretty tough. And then with NVIDIA, I do think at some point we get to a resolution with China, and they'll be allowed to sell chips into China, and that should be good for that stock. So that's a quick rundown of all the Magnificent Seven and kind of how I'm thinking about it.
If I was going to ask you, is there one that's maybe on the higher end of, one or two that are maybe more in the favorite basket, maybe one or two that are in the least favorite basket? It sounds like Tesla's maybe in that lower one. It sounds like the competition for the higher basket in the short term is clearly a little bit harder, kind of indicative of this market. But is Tesla the kind of clear loser there? And maybe it used to be Apple in competition for it. But I'd be curious of what you think within the Mag 7, if you had to pick like a long short trade, go long one, go short the other.
Yeah. Tesla is in its own, special little world where Tesla investors seem to be willing to discount out a decade in advance. Do I think the numbers go down? 100%. Do I think the stock might go up anyway? Sure, because I've seen it before. I think it was 2023. Yeah, the beginning of 23. I remember I was positive on Tesla. If you remember, 2022 was just brutal for that stock, right? Magnificent Seven on average were down 46% that year in 2022. Tesla was down even more than that. And I was like, oh, this actually looks kind of interesting. The multiples come down. And then I remember going, oh my God, the numbers are way too high. They're going to have to come down. And I think estimates went down 50% in 2023. And I think the stock doubled. So this stock, as much as I want to believe it's hooked up to fundamentals in a short period of time, it just doesn't seem to matter. And right now, everybody seems to be willing to try to discount robots and autonomous driving. And, let's just forget about the fact they're going to lose a bunch of money probably in EVs. But yeah, from a fundamental basis, it's not one I like. Weirdly enough, I think because Apple has underperformed, it's kind of been one of my better ideas right now since the iPhone 17 came out. Microsoft to some degree as well, because if Oracle did this well with the revenues that Microsoft didn't want from OpenAI, how well did Microsoft do with the revenues they did want? Which is what I'm wondering. And quite honestly, I like Google and Meta too. So I don't know that I have one, because I think in this tape, you end up with an issue like you're seeing with Netflix, where, the numbers really don't change looking forward and the stock's getting hit. I don't think it's that, weird charges or whatever that they have. I think this has more to do, you look at the guidance, you go, my God, numbers barely change. I think that's what's going on. So for me, I've said this for a while, I think you're much better in this type of tape where you're just counting on rate cuts taking the market higher. And I haven't looked at it as of today, but since the day before the rate cuts through the end of last Friday, if you looked at it, the S&P was up 90 basis points. The Russell 2000 was up 2%, but the Magnificent Seven were actually flat. And that's with NASDAQ up 1.5%. So this is from the day before the rate cut through last Friday. So it just kind of shows you that right now the market's rotating into these other sectors, and that's what's going up. And so I think to some degree, if you want maybe the best risk reward trade, it's you own a smattering of the S&P, the Russell, and the Magnificent Seven, and then you just call it a day versus trying to pick like individual names, because with the macro doing what it's doing, if you own only one name and you happen to pick the wrong one, because there's going to be always something that blows up, right? You could just get absolutely your head ripped off in this kind of environment, because by almost any measure you want to pick, valuations are high. And by several measures, they're way higher than they were in 2000 when you want to look at like price to sales ratios or market cap versus GDP, which is Warren Buffett's favorites. These are well above the levels you even saw in 2000. And so if I'm wrong and you have a problem with AI revenues and people start to question some of these circular deals, you could just absolutely get destroyed if one of these hyperscalers comes out. I don't think they will, but if one of them comes out and says, oh yeah, we're taking down our capex, or we really think it's going to be lower in 2026, if anything like that happens, look out, you're just going to get just clobbered. I don't think that's the case, but I think, if you're bullish, you always have to think about what could possibly go wrong. And, it really disturbs me that OpenAI is going, okay, yeah, we're going to put erotica on our platform, because it makes me wonder, well, what exactly are they seeing for revenue momentum?
Yeah, with the amount they are spending there, they definitely need that revenue to become very quickly. I got one more question. I might have lied before and said I had one more question. You kind of mentioned IWM and small cap land, and I'm just curious your thoughts. And you said SPY, MAGs, and IWM in a separate way, not exactly that. What is your general thoughts about small caps as we're kind of heading into that rate cut narrative, as we're heading into an area where maybe this AI bubble, we could call it, or this kind of market kind of continues to extend in this area? Is that kind of where you're seeing that alpha mostly?
Well, that's, as I said earlier, right, Evan, that's where you've seen it from the day before the Fed started to cut rates again after being on pause for 9 months. During that time through last Friday, the Mag 7 were flat and the Russell was up 2% and the S&P was up 90 bips, or 0.9%, I should say. So that's kind of where
Is
you
that
are.
where is that where you think that, but do you think that kind of is able to continue throughout this
Yeah.
next quarter? Okay.
Yeah. No, I mean, in rate cutting environments, the companies that in some ways are the worst are the ones that'll do the best. And if you look inside the Russell, it's something like 30 to 40% of them are losing money. So they benefit the most from rate cuts. Google, Apple, Microsoft, most of the Magnificent Seven, they don't care. They're generating tons of cash flow. They could care less where interest rates happen to be. But if you're a money losing company, small cap name, you care a lot, because that really helps your health. And, people have been saying the small caps, it's about time, but I think you're starting. I mean, a month is not forever, but it's been a month since the Fed cut rates last, and you're kind of seeing that in terms of the breadth improving and going to other sectors. So I've I've had exposure in financials and industrials and healthcare and all these other sectors, because as I look at the market, I go, okay, the market's telling you by the way it's acting. I mean, you can look at Oracle as a good example of that, right? The high for Oracle was the day they reported earnings. And they had a fantastic analyst day a couple of days ago, and the stock got absolutely killed as they took numbers up. Because I think people are starting to question, okay, great, they have all these orders, but where's OpenAI going to get the money to pay for all of this? Or whatever other companies. And so I think you're starting to see a little bit more discernment around this AI theme, because all of this sounds great, but a forecast is just a forecast. It means absolutely nothing. I mean, I remember the forecast Cisco had in 2000 that they could grow revenue sustainably at 30 to 50%. And then I think it was 2002 and 2003, revenues went negative for 2 years in a row. And I remember, I think during I think it was 02, they said, yeah, like we're going through a rough period, but when we come out of this, we'll be able to grow revenues at that 30 to 50% rate. And in fact, the number was like half that. So that's why when people go, oh, well, all these luminaries are saying we're going to have 3 to 4 trillion in spending by 2030 or whatever, I go, well, okay, that'll work if we're all willing to have $10 a month subscriptions of OpenAI, but if we're not, then that might be a problem. So that's why I'm kind of, you look at the data points, much like with Apple, right? Like if I get data that says, okay, wow, they're getting a ton of subscribers for Sora 2 or Google, I don't know how they're going to work Veo 3, which is their version of video generation. But if you end up with a ton of money going to this stuff, then then I'll have to change my mind. But for right now, it seems like there's a lot of tokens being generated at a massive cash burn to get that done for video without the revenues on the other side of it.